In the world of Forex trading, chart patterns are like the Rosetta Stone, offering insights into market direction and potential profitability. While there's a plethora of educational material available in the form of neatly drawn line charts, the real test for traders lies in understanding these patterns on actual market charts. This article delves into the nuances of trading chart patterns on the H4 timeframe, contrasting it with lower timeframes, to equip you with a balanced perspective on when and how to trade for maximum effectiveness. Understanding chart patterns in Forex trading isn't just about recognizing shapes on a chart, it's about interpreting the economic narratives these patterns tell. Cliff Droke, a noted trader and author, emphasizes the importance of liquidity in chart patterns. According to Droke, the higher the liquidity within a pattern, the more reliable and potent the price movement likely to be. This is where the H4 chart comes into play. The H4 chart is often considered the sweet spot for observing chart patterns due to its balance between providing enough market data to interpret trends without being overwhelmed by too much short-term noise. Patterns on this timeframe are generally more reliable because they reflect the collective actions of a larger pool of traders, including institutional investors whose trades significantly influence market direction. For example, a head and shoulders pattern on an H4 chart might signal a major reversal in currency values, which could be less apparent or less reliable on shorter timeframes like M1 or M5 chart. Comparatively, lower timeframes like M1 to M30 might show numerous patterns daily, but these are often parts of a larger pattern visible on higher timeframes. This concept can be likened to seeing the forest for the trees. A single M1 candle might be the initial signal of a trend change that cascades through to higher time frames, eventually manifesting as a significant move on an H4 or even a daily chart. This hierarchical relationship means that while you might see a continuation or reversal pattern on a shorter time frame, it's crucial to understand its place within the broader market context. For traders aiming to trade 2 to 3 times a week with targets between 40 to 60 pips per trade, the H4 chart offers a clearer picture. Here, the patterns are not only easier to spot but also more likely to result in significant price movements due to the involvement of more substantial market players. Conversely, using charts like M1 or M5 for these strategies might lead to less reliable outcomes, as these patterns could merely be noise within a larger, more influential pattern. The key takeaway is perspective. When you zoom out to look at an H4 chart, you're essentially reading the economic dialogue between two countries, as currencies reflect the health and actions of their respective economies. An H4 pattern doesn't just suggest a change, it often confirms that the market dynamics have shifted, influenced by economic reports, policy changes, or geopolitical events. In conclusion, while educational materials often simplify chart patterns into clean line formats, real trading demands an appreciation for the complexity and liquidity of actual market movements. The H4 chart stands out as a reliable tool for traders looking to capitalize on chart patterns due to its higher liquidity and clearer market signals. However, understanding the interplay between different timeframes is vital. Lower timeframes can provide entry points but should always be validated by the context of higher time frame patterns. As you navigate through the Forex markets, remember that each chart pattern tells a story of economic interaction. By focusing on the H4 chart, you gain insights into these stories, but always with an eye on how these narratives evolve across different scales of time. Whether you're a novice or seasoned trader, mastering this approach can significantly enhance your trading strategy, ensuring you're not just following patterns but understanding the economic forces behind them. Created by David and Grok 2. ltrfxc/substack.com